Bitcoin is a digital currency, also known as cryptocurrency, which was created in 2009 by an anonymous person or group of people under the pseudonym Satoshi Nakamoto. Unlike traditional currencies such as the dollar or the euro, Bitcoin does not have a physical form, is completely digital and is not issued or controlled by any government or entity. Origin of Bitcoin. The origin of Bitcoin is linked to the global financial crisis of 2008. During this period, trust in traditional financial institutions was severely shaken, leading many people to look for alternatives. It was in this context that Bitcoin emerged, with the promise of being a decentralized currency, without the need for a trusted third party to validate transactions. How does Bitcoin work? Bitcoin works using a technology called blockchain, or chain of blocks. Each block contains a record of multiple Bitcoin transactions. When a block is full, it is added to the blockchain in a linear and chronological order. Each block contains a reference to the block that came before it, thus creating a continuous chain of blocks. One of the most notable features of Bitcoin is that it is decentralized. This means that there is no central authority that controls or issues the currency. Instead, the creation of new Bitcoins and the validation of transactions are performed by a network of computers known as Bitcoin miners. Bitcoin mining is the process by which new Bitcoins are created and transactions are validated. Miners use powerful computers to solve complex mathematical problems. The first miner who solves the problem gets the right to add the next block to the blockchain and is rewarded with a certain amount of Bitcoins. This is the only way new Bitcoins are created. Value of Bitcoin. The value of Bitcoin is extremely volatile and can fluctuate dramatically over a short period of time. The value is determined by supply and demand in the market. When demand for Bitcoins rises, the price rises, and when demand falls, the price falls. Using Bitcoins can be used to purchase goods and services, both online and in brick-and-mortar stores that accept the currency. They can also be exchanged for other currencies, both digital and traditional, on various cryptocurrency exchange platforms. Bitcoin security. While Bitcoin is often praised for its security, it is not entirely risk-free. Since all transactions are irreversible, if Bitcoins are sent to the wrong address or if the private key is lost, there is no way to recover the funds. Furthermore, since the currency is digital, it is susceptible to hacker attacks. Conclusion. In short, Bitcoin is a decentralized digital currency that uses blockchain technology to record transactions. It offers the promise of safer, more efficient and faster financial transactions. However, it also presents significant challenges, especially with regard to price volatility and security. Despite these challenges, Bitcoin and other cryptocurrencies continue to attract significant interest, both as an alternative form of currency and as an investment opportunity.